That's a lot of RWA going on there. Look at all that art. Like 2 years ago or a year ago, when you started talking about RWAs, everybody was like, yeah, whatever. And so these guys have weeded through it. So they've made it happen. So I thought maybe, first thing we'd start with is you guys could do a little introduction about what you guys are working on. Just keep it short and sweet because there's 15 of you up here. So if you guys could keep it short and let everybody know, what you're doing in RWAs, that'd be fantastic.
Hey, thanks for the introduction. Love that. I'm Luke. I'm over at Plume Network. We're an RWA focused L1, building a whole ecosystem using RWAs as like the base asset and funneling a lot of that yield to users. So, yeah.
Hi, I'm Michael Healy, been in crypto since 2010, built the app for WikiLeaks when the governments froze our bank accounts, Visa, MasterCard, PayPal, led the Bitcoin fundraise, so got my first Bitcoin at 9 cents, early investor in Ethereum, BNB, Solana. Now I run a personal family office where we're investing mainly in RWAs, and we think we have one of the most advanced blockchains for tokenizing hundreds of millions of businesses and companies and creating on-chain corporations. Thanks.
My name is Raj Bamba. I'm the founder and CEO of Zebra. Our main business is providing institutional payments to wholesale telecom providers all over the world. We've enabled over $6 billion in transactions across borders globally. But as part of our value-added services, we are also enabling telco capacity tokenization, effectively tokenizing the capacity of voice, SMS, and data, and then also invoice receivable factoring, tokenizing invoices, bringing them on chain, and actually providing retail with stable yields that they've never had access to before.
My name is Josh Gordon. I run Shinkai, which is a dual license blockchain as a service platform. We're located out of Singapore as well as in the United States. And what we do is we focus on bringing tokenization essentially at a fund management level, create a very easy service Shopify style platform for people to be able to deploy their funds, tokenize them, and bring them on chain. We've done roughly 600 million total value issued on chain at this point. We plan to do a couple billion this year.
I'm Fahmi Syed. I'm working with Midnight Protocol. Midnight Protocol, which is due to launch later this year. It is a privacy-focused blockchain which will bring selective disclosure to asset management industry within the blockchain. So, and also any data sort of protocols that care about protecting their assets, protecting who they interact with.
My name is Kevin, CEO of Valueit. We're mainly focused in the investment banking industry with procuring and tokenizing assets, mainly structured financial products. And then we also are coming out with a regulated DEX, multi-chain, wherein we're solving for fragmented liquidity across L1s, L2s, and the RWA market.
I think, as Josh knows, one of the things that we've found a challenge in RWAs is everybody that wants to invest in RWAs is you have to be a certain level accredited person here in the United States, right? So it creates a challenge for getting people to engage, and you're all dealing with the same exact issue of trying to reach all of those people. So what do you guys envision is happening that could ultimately bring you all together and be sharing all of this information across so somebody could get accredited one time and not need to do it, 15 different times? And I think that would enhance the industry and make it a lot better. So I want to hear your thoughts on that.
Yeah, most definitely. So I had an interesting conversation with David Sachs, the new crypto star, a few weeks ago in Mar-a-Lago, and I asked him about the future of unregistered securities, of the SEC, and how this new system and the old system will sort of converge and work together. And what he told me was it's unlikely that the rules are going to change overnight, but he said this new industry and this new technology can supersede the old system. So where I'm super optimistic is, our entire industry is maybe 2 or 3 trillion market cap, right? I think it's going to grow to 500, 7 trillion. Every single business will be on chain. It's kind of similar if you think of Uber, right, or Airbnb. When they launched, they tried to apply for taxi permits, right, or hotel licenses. It would have been extremely difficult. So I'm optimistic that KYC, AML, investor protection rules, all of these things, might still exist, but there'll be a fragment compared to the greater, tokenized asset securities. Same as Bitcoin. If Satoshi tried to apply for permits or do KYC or AML for all his early Bitcoin holders, I'm not sure it would be where it is today. That's my take.
I know we've talked about this a lot, Chris and I have specifically like
A lot.
Having some type of consensus compliance, really rules engine for us all to be able to interoperate with each other is going to be really key for us all to be successful long term. When we're thinking about it, like you're saying, Chris, when somebody comes into the DNA desk and wants to purchase an individual tokenized asset, they have to go through KYC. They have to be accredited if they're a U.S. person that's investing here, any type of private place or offering. These are the type of things that once we get regulatory clarity, like he's saying, coming down from the crypto czar David Sachs, very happy he's there. Ultimately, what will happen is you'll be able to purchase this as easy as just like any other equity investment, right? But it's probably going to be another year, another 2 years, and then once that happens, there's really going to be consensus. I think it's going to come out broadly. It'll become multi-chain, and then we can be able to really work together to help, bring our ecosystems together, because that's what TradFi is. The whole point is for us to work together in this space. We were just talking about it back there. There's Charles Schwab, there's Goldman, there's hundreds of firms that are worth billions of dollars, but they all work together. And that's what's important for us.
Yeah, I totally agree. And adding on top of that, as we keep building out value-added services as individual builders and entrepreneurs, and regulations coming forward, I think the main component that will tie all of it together is on-chain ID and native contract permissioning. When the native contracts will be interacting directly with on-chain IDs of different users all over the world to decide whether or not X, Y, and Z users are actually eligible to buy X, Y, and Z securities. And I think that's kind of the future that's going to propel us into multiple companies interacting with each other's products across the world.
Midnight.
So at Midnight, we care about privacy, and privacy comes with identity. When Bitcoin came and gave us freedom and decentralization, we all accepted what it gave us, but we gave up our privacy. And in the real world, where there's liquidity on-chain, but the real liquidity is off-chain. Real assets are off-chain, outside of this room. The large asset holders will not put large holdings on-chain if they are disclosed, they can be doxed. We all have to accept that. So privacy is an element to that. So in Midnight, whether you build it natively or use us as a meta chain, we believe we can bring KYC solutions with partners who can bring a consolidated DID solution. That every partner on this panel here could come to Midnight as a 2FA, as authentication. Why should every person trying to onboard with every single application on every single chain have to build a new KYC ID solution, new technology, everybody has to integrate with? Let Midnight be that meta chain. Let us be a privacy control blockchain that we can work with everybody on this panel.
Yeah, I think it's the main USP of the value at DEX, wherein we are effectively aggregating multiple L1s, L2s, where RWAs are sitting. Instead of kind of the on-chain IDs, wherein each person has their individual, we work with a singular transfer agent, wherein they can connect to multiple on-chain ID systems, wherein now you can effectively aggregate liquidity across, say, Chintai's ecosystem, Plume's ecosystem, all within the same interface. So it's really abstracting the user away from the complexity of the infrastructure, rather than, I think it'll take a while to create kind of a unified consensus DID, mainly because of reliance. We're all different licensed entities. If you have licenses, obviously, we all know it's a tough thing to actually get reliance for KYC from someone else.
Do you guys ever envision a time when there's, because there's a lot of people that are out there that just have no interest in anything about registering anywhere about anything at all, right? They just want to decentralize trade, and that's where all the activity is happening. This is minuscule compared to what's happening there. Do you envision a day where there's a solution that is decentralized like this, that doesn't require any of these things to happen? Like, okay, I know we're all following SEC rules and all that kind of stuff, but there's a whole world out there that's not isn't worrying about that, and there's way more activity out there for that. Do you envision a day when something can happen that brings that liquidity to the RWA world?
Yeah, no, 100%. I actually had a thought on that. I mean, look, I think right now there are examples of that. Right? Athena is a perfect example of something that is a carry type trade, and it's happening as wrapped as a stablecoin. And there are ways I see this sort of innovation taking place, right? Like right now, no one wants a KYC on chain. It doesn't make sense. Why do I have to take my wallet that maybe done well in or maybe done really bad in? But why would I want to put my name onto that, right? So there are ways around that. I think that's been happening. But also, I do think there are, of course, assets that need to be, geared towards accredited investors, right? Because the risk profile is very, you know, difficult or unique from that. And we do need that aspect of that security there. But yeah, like I said, there are a lot of assets that exist that fit that profile, and it is happening today.
So my big take is I think there needs to be better tools for valuing tokens. So people look at a coin or a protocol and they go, great team, great vision, great marketing. It's going to go up 3x, or it's going to go up 20% or 30%. So if we have quantitative measures, same way you value internet companies, you value retail businesses, business on the stock exchange. I think that's the first thing. Number two is I think the innovation on RWAs isn't very exciting. People look at stocks, bonds, T-bills, funds, listed companies. I think the big opportunity is what Chris said, the hundreds of millions of businesses that exist, which are illiquid. I think it's providing access to people unbanked. I think that's the big promises of crypto. I think putting blockchain on top of a TradFi wrapper is pretty uninteresting. And I think what's really going to revolutionize and grow the space is thinking like 0 to 1 versus just an incremental upgrade of putting XYZ on chain. Yeah.
I think one of the major interests for the entire DeFi community that's purely working under privacy and non KYC, etc., is two things, right? I mean, number one is probably taxes to a degree. They don't want to pay capital gains taxes, etc., etc. I get it. And then number two is also that most of the routes that they access these assets are non-regulated on their own, right? So there's no need for KYC. But whenever the bear market comes around or they need to store value somewhere, they need access to stable assets that actually provide real world yield and won't have a massive differential quarter over quarter. And at that point in time, I think if we have privacy solutions such as Midnight, we can definitely incentivize them to, get access to, let's say, a private credit fund out of the U.S. providing 14% yield annualized against Bitcoin or USDC, etc. I think it just comes down to the incentive mechanism there is, because people aren't necessarily that privacy focused. People are more alpha and returns focused. So it just really depends on what the offerings become within the RWA sector as a whole.
I think looking at it long term, Chris, it's a little bit interesting hearing your question. I think that right now the trading activity is primarily happening, in the DeFi space, but that market share is key. Probably all the DeFi trades in a week would TradFi trades in an hour. And so when I'm thinking about this long term, it's going to be a little bit frustrating. It's going to be a little bit hard trying to remain compliant, trying to do everything the right way. But I see a much larger pie down the road. And as long as we continue to do things the right way, we'll be leaders in the space. We're going to bring high quality assets on chain. And like Raj is saying, when the market flips and we get into a bear cycle, I think that people that have high quality assets that people can rotate their gains into, we're going to win. We're going to do really, really well. And that's going to become the future of DeFi. It's not going to be invested in this, 30% yield that's token juice. That's just it's not real, right? And the second that you have, it's like a house of cards. You pull the cards out, you see a big pullback, a black swan event, those things are going to fall apart, right? And so I know it doesn't sound sexy to get 8% return, but I think the stock market's worth $16 trillion, and it's pretty sexy to get 8% return over the last 100 years. So, my goal is to focus on that and go after trillions of dollars.
Yeah, I agree with that. Look, ultimately, within Midnight you can have selective disclosure. You can have a public state and a private state. So if you want to carry on DeFi the way we are today, you can build that in now. But going to the trillions of dollars that are out there, we're bringing real world assets into Midnight, where these are insurance-based products issued by listed US companies with 20 to 30% yield. That is an attractive proposition because it's backed by a real business. That business is attractive to large pension funds. Take a future fund in Australia, billions of dollars of assets. They write tickets, minimum size of $50 million, $100 million tickets. They're not going to put that on a blockchain where you want dollars. They care about 20% yields in insurance products, and that should be available to other people too, individuals as well as large enterprises. You bring that into a solution like Midnight with the public and the private state. The issuance is public, so people can see the TVL what the token is. You can choose to be private in how you hold it. So there could be a private version of that DeFi solution or a public version, one that works for decentralized non-blocks people, or a private version that works for large institutions. And that's where we see the future. Is the trillions of dollars that aren't coming in because nobody wants to put their bank balance, their actions, their transactions on a chain to see. Everybody walks around these conferences with lanyards. There's a QR code, you flip it around if you don't want anybody to see you. If you want people to see you, you flip it around, you show your name and your company. You don't put your bank balance on there, but we said that's okay in blockchains. The big asset managers, the big institutional trades that will open liquidity for the retail clients will not come into the software. And private chain solutions, permission ones, aren't the way. A permissionless blockchain that can give you that selective privacy from open gateways.
Yeah, I think as we see more and more assets that are in kind of the top 4 quadrant of TradFi that we all know come on chain, other than kind of treasury bills, I think the more and more people will be willing to KYC, willing to KYB. I mean, they've been doing it for Robinhood and all the TradFi institutions to get bank accounts for years, I think until DeFi became relevant, which is still minuscule, as Josh mentioned. It wasn't necessarily a problem. And the better products we can give them on chain, the more incentive they have to KYC.
Thank you. What do you guys see as, like, if you take this a year from now, right? Like a year ago, the conversation was, I remember my partner Scott, every time an RWA deal would come in, it was just like, yeah. And I wish we would have taken Josh's deal at the time because the token was at like 5 cents and we could have bought it at like a discount to 5 cents, and now was announced 50 cents, 60 cents, somewhere up there. So, but now people are listening to this story. So, it's made a lot of progress in the last 12 months, I think. I think you guys have been working hard. A year ago, this story was harder to tell. Now it's getting easier. And what do you guys see in the next 12 months? Where do we go from here? And how do you think you look back and see that in 12 months from now?
Yeah, I think tons of innovation, like you said, have been happening over the past 12 months. We've seen a number of financial institutions come on chain, BlackRock, Franklin, all these great guys. But at the end of the day, I do think the current problem in RWAs is that it's an adverse selection problem, right? You bring a lot of lower tier assets to the chain that aren't as attractive because they think crypto is a distribution place. So you sell all these assets into crypto, but not necessarily the best place. So it's really just curating the right type of assets to happen that people will find, fit for, that it's actually an appealing thing, right? And that's, I think, the biggest problem right now. Say if you could access maybe an SPV for like a hot AI deal like Figure AI, you would take that, right? That'd be great. But of course, that demand is filled. So it's about bringing those quality assets, and that's what we're trying to do, is work with the right institutions, the right asset issuers to actually have natural product fit.
So I think the big issue is I think the big issue is quality control. So, if someone can't raise money, where do they go? They go to crypto people who don't know what they're investing into. So every 4 years, people think, okay, there's a cheap source of capital. That's the crypto market. Let's just dump, real estate. We can't sell the real estate in the traditional markets. Let's sell it to the crypto bros. So I'm optimistic that the quality of the assets in the crypto sphere will improve. I was actually at the first ETHDenver in 2018, and I sat next to the person who started OpenSea, and the NFT standard had just come out maybe 2 weeks prior or 3 weeks prior, and they had to slog maybe 2 years or 3 years of nobody caring about NFTs. And then you had Grimes, so Grimes' brother, who I'm working very closely with, issue one of the first relatively higher quality NFTs, and that really kickstarted the market, right? So I think, to Chris's point, what's going to kickstart the RWA narrative and drive real adoption is when, in my opinion, we see a real business, something like, the Facebook or the Amazon or the eBay or the WhatsApp, like a real business, which instead of using shares or equity, uses a coin or a token, and people see, wow, this is a great way to give, millions of my users, my employees ownership,
liquidity without having an IPO or getting acquired. So I think that's the big promise of RWAs. I don't think it's tokenized shares. I don't think or tokenized TradFi assets. I really think it's the millions of assets which are not interesting to TradFi, right? Things that venture firms or PE firms or the stock market isn't going to touch. I think that's really where the opportunity is. Yep.
No, it's very interesting that you say that because there's kind of like the core functionality of the Zebra protocol that we built out is that Web3 users, not Web3 users, anyone can really buy ZBU, ETH, BTC, USDC, USDT, and come provision it into our DEX pools, and they earn a chunk of our revenues from real-world institutions actually doing transactions using those DEX pools. Why is it important to keep slippage low? Very simple, right? Not rocket science. But additionally, what I actually see as a kind of roadmap for RWAs and real-world utilization of blockchain technology is number one, adoption of current regulation. I think a lot of people make the excuse of not actually getting regulated by saying, "Oh, regulation isn't up to par." I mean, they're partly correct, but at the same time, you can do. There's a lot you can do in the existing regulatory framework. I mean, you can do Reg A issuances, you can run a whole platform similar to DNA, you can do private placement. The SEC and FINRA have digital asset issuance licensing, right? There's quite a bit you can do. So over the next 12 months, I think we're going to see a mix of filtering of the assets that do come on chain by number one, institutional participation. But like institutions will effectively underwrite the assets going on chain first because they want to earn a premium on it, and at the same time, more companies will start adopting existing regulation because that's really the only way to pivot to new regulatory practices is when you figure out what the actual inefficiencies are with actual existing regulation. So that's kind of my like 12-month-ish prediction is that more companies like Zebra will pop up that will use liquidity as a new segment to conduct business. Institutions will start doing underwriting for assets that are going on chain, and people will start adopting existing regulation before they start expecting pivots in the regulatory framework.
So if the quality gets better, you get the underwriters that are going to engage in the framework.
I think a big thing is education. Like when I go talk to KOLs in the space, when I'm kind of like explaining to them what Shinkai does, they go, "Josh, slow down. Nobody knows what the hell cross-border payment transactions are, capital market inefficiencies. Like, we don't know what you're talking about. Like, no retail consumer is ever going to buy this because you're doing that better, right? It has to be very straightforward and simple. So, like, when I kind of think about this, I'm like, we need to do a better job educating real-world assets. We need to do a better job working together. Like, this is like the main thing that I think we need a place. Like, I love that you guys are building a DEX where we can all come on. It is permissionless chainless. We can come on and all work together. We need to be able to find as many high-quality assets as possible. We need to bring them together, and we need to start actually educating the communities on why they should buy these over the next Terra Luna that you're holding right now. And if we do that right, I think RWAs is going to have a very big year. I think within 2 years, the total value that's going to be essentially issued through tokenization is going to be 3 times greater than all of crypto market cap currently.
So I agree with many things Tony said. We need better supply. Why are we doing the Treasury Biddle Fund on-chain? We can get it cheaper off-chain with a lower threshold. That's not exciting. That's not why we left TradeFi or others businesses to come here. The insurance product is interesting because you're bringing something that only corporates have access to a retail market. So supply is important. But demand is important too. And we keep talking about retail demand. Retail demand only goes so far. We know in the real world, institutional flow is what drives liquidity and then allows retail demand to work in that space. So you need supply and demand. So demand is going to be curtailed again because of disclosures, because of the openness of the blockchain. So privacy is one thing, and I won't battle on about privacy. The other thing that prevents institutional demand coming is the cost of transaction, or the predictability. We all have pensions or assets in the real world. We may own Apple shares. We don't sell our Apple shares to buy an iPhone. And yet today, in every blockchain, you cannibalize your asset to pay for the transaction. You have to chip away your Sol holding to pay for your Solana transaction. Your ETH holding to, why is that accepted? So in midnight, we're going to have a dual token solution. We have an ownership and governance token, which will release the private confidential compute power within midnight. and that compute power comes for free. It's like eating at a buffet. You pay once and you can consume as much as you need. So all the transaction in midnight, you have that token, comes for free. If you're a corporate or an asset manager, you can now predict how much assets you need to hold to fuel your transactions. That's just hugely powerful if you want to build a business, if you want to bring retail and institutional adoption into blockchain. So that's another thing that, again, we all need to consider about how do we make transactions easier and simpler to predict for all the potential investors.
You think that can happen this year?
And that's coming this year, yeah.
Huh?
Look, we have RWA issuers coming, we have institutional custodians who are building on Midnight, because they see the value of that adoption. We want to connect those large investors to these RWA issuances, which will then allow retail investors to come in and benefit from that liquidity. And we want to give it away for free.
Free's good.
There's nothing cheaper than free.
Yeah, I would agree with Josh. I think in order to make kind of the RWA industry pass crypto, it really falls down to three things. And the first is investment grade assets. The only way to enable that is to have native regulation, investment banking procedures, and you're up to par with the TradFi standard. In order to get institutional customers, you have to be up to par with their current processes, regulatory frameworks, and you have to be inherently connected with the SEC, connected with FINRA, and working with them to create digital securities rather than tokenizing real estate through a DAO or some other random vehicle that really no retail investor should ever have access to participate in. So I think that will lead us to a bullish RWA market. And moving forward 12 months, I think we could pass.
I'm actually a big contrarian to this, RWA sort of sentiment where everything needs to be regulated, everything needs to be SEC approved. I started one of the first mobile dating apps in the UK. We were biggest competitor to Tinder. When I started it, people didn't believe that people meet online. Right now, about 60% of people meet people online, their significant other. And, imagine if someone said, hey, dating apps will need to get approval. So if you want to meet someone on a dating app, you need to go into an office or you need to apply for a permit, right? Or imagine if, now we've got millions of social media accounts, right? Imagine if you said, hey, if you want to create a news outlet, a social media account, you need to apply for permits, you need to be approved. I think that's kind of the same sort of narrative. It's like, imagine I run a newspaper and someone says, hey, Michael, you should put your newspaper on the internet. And I'm like, okay, I'll take pictures of my newspaper and I'll put it on the internet, right? But that's not really what people are interested in, right? They want to take the content of my newspaper and they want to put that onto a digital website, right? So how it relates, I think, to digital assets and tokenization is when someone buys into a business, a fund, an entity, they're really interested in the yield. They're really interested in the earnings. So if we can move that yield on chain, so my belief is, I'm half Singapore and half British. I grew up in Singapore and Hong Kong. These are the holding companies of Asia. So if you have a Filipino entity, an Indonesian entity, a Malaysian entity, you usually set up a Singapore or Hong Kong holding company, and the profits from these other countries in Asia move to Singapore, Hong Kong. I think coins and tokens will be the holding company of every business in the world. So if you have a local restaurant like this, you have a vineyard, you make furniture, I think that you're going to set up a coin. You will need that coin to be regulated, but you're going to move your earnings from your underlying LLC or limited company or GmbH in Germany up to this digital token. And I think the more money you move up, the more that people are able to value that digital asset. So the cool thing about this, it scales to hundreds of millions of businesses. The current regulators, they can't prevent something like Enron or Wirecard or FTX. I don't think that's what's going to prevent the next, thousands of assets which are going to go on chain from TradFi. It's going to be on chain regulation. I think that's what's going to scale to this point, our industry multiple fold.
So, what do you think would be the equivalent of on-chain regulation? Because in theory, as a company, I could start aggregating value at the token level, and I can make verbal commitments to the entire world that I will do so, and hence I want you to buy my token. But in reality, there's effectively no one forcing me to provide distributions, dividends, and returns, or buybacks on a quarterly basis. It's all discretionary up to the board of my company, and we could just let go of the token tomorrow and say, oh, we don't care about it anymore.
Yep, it's a good point. So I think the free market plays a role there. So how we approach it is when someone creates an on-chain entity on Unit Network, our protocol, there's basically two wallets. There's an operating wallet and there's a sort of treasury wallet. When they move money to this treasury, it backs up the book value of the asset. And the more money they put in there, the higher the exchange price increases. So I think the cool thing about that is the enforcement works at scale. Like if you look at how many disputes go to court, it's not very frequent. It usually settles out of court. So I think to your point, it will happen on a peer-to-peer basis.
I think one of the tricky things is like I've invested in a lot of businesses, and I can't tell you how many times people say certain things, and then you actually look at their books and they're completely off. So if somebody's creating a token valuation based off of their book value, and there's no compliant framework that's auditing the book value, that's my concern. If we're bringing those assets on chain, I know it's a free market, but ultimately we have to protect the consumers too, especially when you're talking about large scale consumption.
All right, so I'm getting the hook like 10 minutes ago. So I appreciate the conversation. It was great. I think there's a mixture that could ultimately happen between these two things. Maybe there's a grown-up version of everything that we're talking about that combines these two thoughts. I think that, having it more this way would be fantastic. And
Chris would like it that way.
I would love it that way. So we're going to go have a conversation after this, and we're going to set all the rules.
You're gonna kick me.
Yeah. But we appreciate all the conversation from you.